Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. If you tuned into my report last week, you'll know that I leave my lines on the chart so you can see how the forecast worked out. And as I zoom in right there, you'll see that last Friday, which was this red candle here, I said we would most likely move lower and then pop to test the resistance at this roll reversal / 20 period moving average. I even mentioned the fact that we could most likely gap down on the opening, which we did right there. That green candle, the bottom of the green candle suggests the opening price. It was a gap down from the previous close, and then we filled the gap. We moved up, did not get all the way up to that moving average, but did wind up right down at my target price, which is 188.45. Now, what does that mean for next week? Well, I'm going to erase all lines right here and redraw them for you. We had a significant event occur today in IWM where we have a close below 188. Now, if you remember what I was talking about with regard to support and resistance and how that roll reversal works, let me draw this for you. The 210 level was a level that I was keeping an eye on starting back really in May of last year, May 20th to be exact. And I said that if we close below that 210 level, our option traders would go full-fledged all the way bearish with negative delta positions on their options, and that's exactly what happened. Now look, right here, that former support turned to resistance. Now looking down at this level right here, right around 188, you can see that we did in fact close the week below that support level on higher volume, and the oscillators are continuing to move lower. So the momentum is still on the downside. So my forecast for next week is going to be very good for those who are bearish and have option positions that are geared up to make money on the way down, but it may not be such good news for the people who are long and are more of the buy and hold camp. Next week, I'm just being conservative here and saying that we could see IWM drop to 180.72, and then we could possibly see a bounce. But we're going to take this one step at a time with the downside target first at 180.72, and we'll have to keep an eye on volume from there. Now, if we look at the Qs, ticker symbol QQQ, similar result where I said we would most likely gap down, move lower, bounce. We did bounce, and matter of fact, yesterday, Thursday, right here, the 28th of April, we moved up, came close to that target, but did not hit the target. And just like IWM, closed below that support level right there. So again, what does that mean? Well, the way I see it, it means lower prices. A breakout below a key support level like that usually means lower prices. So we're going to keep that momentum moving lower, and then we'll have to see what happens with Fed news and maybe some other earnings that pop up next week. But I'm still very bearish. The way we closed today was almost identical to the way we closed last Friday, and so the momentum is still pointing lower. My target for the Qs is 307, exactly ends at 307, just by chance it happens that way, and then we'll move on from there. Now, one thing I want to point out, because we have a historic event happening this week, and if you look at the monthly chart, I pointed this out a while ago. If you look at the monthly candle, that is a very significant bearish engulfing candle that is also closing below the 20-month moving average right there. Since the Qs have been created, since Nasdaq has been around, and especially the tech sector, this is the first time in its history where we closed with a bearish engulfing candle in April, and we've also closed below that 20-month moving average. So that is a very significant signal. Watch out below. I'm not changing my long-term bearish tune at all. In fact, I'm stressing more now the importance of risk management than ever before. So again, for those who are continuing to hold or buy at these levels, be very, very careful. Use risk management and keep your eye on the charts. Now, if we go to the diamonds, ticker symbol DIA, you'll see that I didn't make a report on a forecast. I just kept my previous open target, which was down here. And we filled that target almost immediately on Monday. And now this support level here is now turning to resistance here. Again, look at that big red candle on the diamonds. Look at the increase in volume on the way down. And look at the CCI turning back down. So what does that mean? Well, I'm going to erase all my lines, and I'm going to go further than I usually do. Right here, I'm going to say next week we're going to test that support level right there. Let me draw my line and leave my target in place. My downside target for the diamonds, 326.14, 326.14. Now, again, going back to the monthly chart, and if you go back, actually, if I look at the Dow, you can see over 100 years of activity here. We have, again, another bearish engulfing candle in April with a slight close below that 20-month moving average. Now, for the sake of reporting on historic events, in the last 100 years, that has only happened one other time. So in other words, there was only one other time in the history of the stock market where we closed with a bearish engulfing candle in April, and it was closing below the 20-month moving average. When was that? Right there. You see that? That was a bearish engulfing candle in the month of April in 2002. It was a close below the 20-month moving average, and that was the beginning of the capitulation phase. There's 3 phases in a bear market. That was the last phase, phase 3, capitulation phase, and it was brought about right after that signal. Again, this is the only other time in the history of the Dow that that's happened, and here we are. It's happening all over again. Look down below. The CCI is crossing below that zero line. That generally means 2 to 4 more months of downward selling pressure. And again, I'm not changing that bearish stance at all. Our option trades are doing phenomenally well, especially those who got into the SQQQ position yesterday. Congratulations if you got in on that. It was actually a better trade than I even thought it would work out to be, because after I put the trade alert out, the prices actually got better for our members, so they got a better price as compared to what it was reported. But it's already up and doing very well. So again, congratulations to our option traders who are part of the Market Rebellion membership there. All right, so that is the diamonds. Let's take a look at SPY. Again, same story, bearish engulfing candle on the monthly chart, and we are right at this key support level. Now, because of this downward pressure brought about by higher volume, I think that next week we're actually going to break out below that support level. So to be conservative, just going a little bit lower right there. I'll draw it out to a couple of days further. Downside target 405.67. Again, for the spiders, that's on the daily chart. Look at the oscillators starting to turn back down on the CCI. We did come down. Look down as I expand that with the magnification button right there. You see that early in the week I said we would move lower. We did that Monday and Tuesday. We bounced. Didn't come quite to this high, but I'm okay with that because we're still short and we're still making money on the way down. Again, acceleration of volume means added selling pressure right into the close today. Now that brings me to the VIX, ticker symbol VIX. As I mentioned before, I'm keeping my horizontal lines in place as targets right here. My target was hit. That was one that I kept in place for a while. My target was $30.17. Now look at what we're faced with here. This is a very big, long green candle on the VIX. What does that mean? It means higher prices. I think we're going to go higher next week. Maybe a little bit of a pullback after that, but I'm keeping this 41.88 in place. Actually, 41.88 is from here. $41.88 is a long-term target I've had on the VIX. I feel very confident that we will ultimately hit that. So for you VIX traders out there, I'd rather see people buy in the money, longer-term calls if you're going to play it that way, or buy longer-term puts in the SPY to make money on a rallying VIX. So that is a target next week for 35.36. Again, congratulations to our option traders who are following the charts. I think that's a great thing that you're doing. And remember, last week I reported on Pfizer, and I said I would most likely take profits on my puts on Pfizer. We did make money on that. It was a little bit of money. I did get out of my puts. Eventually, our members got out and we made money on that. But again, we continue to put on spreads that capture premium from the market. So in other words, we collect money from the market to be able to pay for our spreads and make money that way. So if you're interested in learning how to trade options, just contact Market Rebellion, have them plug into some of my events in May. Next month, I have a free webinar that we're putting out. So you might want to ask to get plugged into that to get the link. I spend an hour showing people what I do. It's very exciting. Again, if you've never traded options, it's okay to at least learn. You don't have to start trading right away, of course. You want to learn and more or less crawl before you walk and walk before you run. And we take you through each step with a focus, important focus, of course, is on risk management. Finally, I want to bring your attention to this. This was more or less the breadth of the market. If you look at the New York Stock Exchange here, we had 24 weekly 52-week highs, but look at that. We had 333 52-week lows. I leave the link to this report in the description box below. This is almost a 14-to-1 ratio to the downside. So again, it gives more fuel to the downside for those bears. And if you look at the Nasdaq, look at this. 39, just 39 stocks hit a 52-week high. But look at this, brace yourself. 561 new 52-week lows. So the downside pressure is on. Make sure that you're managing risk. Make sure you stay in touch with Market Rebellion. And with that, I'd like to wish you a great weekend. Take care. So long.